This is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show, where we look at the technical charts and then try to understand what happened in the market during the previous week and also plan for a better trading week ahead that's starting from tomorrow, June 2nd, Monday 2025. Let's get into the bird's eye view. The charts here shows the Nifty weekly and Nifty daily on the right side, and you can clearly see that market has completed the correction, recovered most of that, and then trying to head towards the all-time high, while last week we see a continuation of the pause after the big recovery that happened a few weeks before. And market is in a trend line channel on the weekly as well as on daily. As you see right side, market has almost touched the top of the trend line channel and then consolidating or preparing or correcting or profit booking and then trying to move further up. While on the Banknifty charts weekly shows an ascending wedge and it's heading towards the top of that once again, while daily Banknifty shows it's once again heading towards the top of the trend line channel, and that will be once again making a new all-time high. So overall things looks fine. And in a nutshell, this is what happened. Like, it was further pullback that happened on Nifty. That's 0.41. That's 100 points, nearly 100 points lost, and still continue to be above the 20 daily exponential moving average. Remember, we had a correction of 70.23. That's during a 72% bull rally from 2020 to June. So Nifty also, the correction is very less, 12.45 so far from the top, and it still continues to be above the 20. But it, in fact, it closed contrary to the Nifty. It closed positive more than 0.5%. That's 355 points up. So Banknifty is showing much more strength in the Nifty. And candlestick wise, if you see, Nifty's weekly candle is showing almost like an inverted hammer, and which does not have much significance except if the price falls below this hammer. It could be an indication of a further downfall, a reversal of the trend. But it's not exactly a inverted hammer. The wick size in the top indicates the attempt and resistance and the volatility. Right side Nifty's weekly hands shows a hammer, which again could be indicative of a reversal from there towards the downside if the price moves below the low of this hammer. But otherwise things looks fine. It has closed positive and set a resistance zone. You can see that map has goes from there multiple times, and the breakout from here could be a very big one. That's Banknifty more showing bullishness candlestick wise, with the potential threat as being a hammer, and the big size indicating volatility. And Nifty, on the contrary, is continuing with the pullback with a kind of bearish candle. On the daily charts, if you analyze the 5 days, we see that 5 days it has been moving down and then trying to consolidate from Wednesday. Right, and while Banknifty has made a V-shape move. It moved down along with the Nifty and then recovered most of that on the last couple of days. So, and finally it closed positive as well. So there is clear contradiction between Nifty and Banknifty's move. Nifty pullback, Banknifty attempted a V-shaped recovery, and the candlestick wise, if you see, Nifty's Friday's candle is bearish, but Banknifty's Friday's candle is green, but it's at resistance, and there is volatility, and there is a possibility of reversal if the price moves below the daily candles, Friday candles low. So these are what we can make out from the candlesticks. This is a summary of those explained here. Orange bands on the other hand is having bullish bias and seems like it's expanding on the upside above the median of the orange bands from the daily on Nifty on the left side and Banknifty on the right side. Expansion beginning on Banknifty. So bullishness, what does indicated from the Bollinger Bands, and it says there is further up move expansion that could be possible from here. Right. Momentum RSI is what is used on multiple time frames, left side Nifty and Banknifty on the weekly time frames, right side you have daily Nifty and the Banknifties. So medium term you see that it's bullish. Momentum is bullish, but it has slightly slipped in the case of Nifty into the sideways zone, so again, but otherwise it looks very bullish momentum. Medium term, the short term, Nifty shows slight slippage into the sideways, and while Banknifty is showing some up more the upside. So overall, you can say Nifty is sideways and then heading towards that breakout zone about the 60 RSI. But medium term, but short term, Nifty is not in great shape. It's met with resistance and then falling, sliding down momentum. But short term, Banknifty is strong. Medium term also Banknifty is strong. So overall, this is the story. Now when it comes to the ADX, the trend indicator is the ADX that we are using. It is maintaining the bullishness, although there is some falling bullishness in the case of Banknifty. So bullishness is maintained overall in both indices on both time frames on Nifty and the Banknifty. So it's the momentum that is slightly taking it. Now, right side, what we are seeing is the India VIX that just crashed down or just fallen nearly 7% and then go to the 16 level, but it's still above the 15, so we can say it's still medium or above medium volatility. So, so we're a bit cautious still, unless it cools off below the 50. Then you still say that the volatility is high. So there's some amount of fear that's still there is what's indicating, but the cool off indicates that yes. The fear of the Nepal tensions, escalations, and all have cooled off now. Probably the trade tariff fears are also cooled down, but not gone completely away. Looking at the open interest analysis from the derivative section, you see that there is there is a futures open interest which is showing bullishness on both indices. Nifty and the Banknifty on the flat is build up. It's short building and long build up. Short building on Nifty and Banknifty is having a long build up, so that's bullish. Futures are is bullish, but options are for the weekly is showing that Banknifty is slightly bearish because 0.6 not slightly, it is bearish. 0.6 is what the PCR put call ratio is showing, but Banknifty on the contrary, but that's for the monthly is showing bullishness. Right, so PCR is not for the monthly, it's for the it's for the short term. So PCR wise, as the price and momentum and trend is indicating, Banknifty is having an edge. It's showing more bullishness there. So that's no big deal. But Nifty is showing some weakness with respect to the put call ratio. Right. So overall, we can say, except for the options high on Nifty, everything looks fine. Right. So the one way to find the levels of resistance and supports is to look at the amount of call writing and the put writing that is seen. So that details are mentioned here, and that's used for placing the bets on support resistance level. So that indicates that there is a very wide range of Nifty weekly June 5 weekly expiry. The highest support is 24,000 and market right now is much above that, 24,700 nearby zones, and then resistance is like 25,500. So if it is falling, the betting is very far away, and if it is rising, the betting is rather more closer, but again another 700 points or so. That's the range. 25,500 is where the highest call writing is seen, and 24,000 is high put writing. The second highest call and put and call writing is at 24,800 and 25,000 respectively on the Nifty. While in the Banknifty, it's monthly expiry. 56,000 is where the bets are all placed as of now, where the highest put and call writing is there. After that, 55,000 is the second highest put writing, and 57 is where the highest resistance writing or call writing is seen as of now. So that's one way of finding support resistance. Another way would be to look at the technical charts and then understand the Fibonacci's techniques and exponential moving averages, previous highs, previous resistances, rounding numbers, and all these, and then derive at the levels. Accordingly, we can see that the market is at the top of a trend line channel in a breakout. So right now, the previous breakout zone is at 24,857. From there, it broke out, but it didn't sustain. So that's going to be a major resistance zone. After that, Fibonacci 23 comes in at 25,105, but 25,000 is there before that. So once the previous resistance zone at 25,333 is taken out, we can meet with the resistance at 25,739 where the gap is there, gap resistance. After that, if that is also taken out, we can go towards the all-time high once again. If 26,000 is taken out, downside, first major support would come in at a gap that's way down at 25,164. 24,000 would be a major resistance, major support. and then the exponential moving averages 20, 50 and 100, all that you see here are all supports likewise, right? And then the major, so 24,000 can be looked at a very good support. So all the additional details are all mentioned here. You can make a look and map that. We can slow down, pause, and then you'll see the video later, and then understand the levels. Correlate that with the Nifty options levels, and then you can find a place where you can bet a bet. Right. So this rounding RN is a rounding number, ATH is all-time high, 50 RN is a rounding number, PSH is previous swing highs, gap is window gap, DEMA is daily exponential moving average, and Fib is Fibonacci 38, likewise. Okay, let's move it. Yeah, so levels for the Banknifty also is like this. The first resistance will be 56,000, and then it's a breakout. If it's falls down, first major support will be 54,000, and if that's right now, it can go as low as 53,888, where a bounce up could be possible, because that's where the rounding pattern breakout happens. So that's how it is. Let's move. Look at the sectoral indices. It was a down. Then you can see almost all of the major sectoral indices. Look at corrected, not severely, but less than 1%. Everywhere you can see that. And overall, market is not in bullish zones at all. Well, in the medium term, if you look at, right, all the sectors are sideways and sustaining that. It's not going to the bear zones yet, but this week it was pulled back mostly, except for the Mama, which closed flat. Right, so that's what is indicated here. So examining the sectoral indices charts, you can see a sideways attempting recovery in Nifty within a parallel trendline channel, and again parallel trend line, sideways rising of metal. Auto also attempting to break out to the RSI 60 above zones of the momentum. Everything is sideways. From also trying to sustain that sideways momentum and move up. FMZ also facing super resistance last week and then falling from the sideways while it was starting to move. And is doing good and trying to break out from that flat pattern. Momentum also is not climbed as the bull zones, but attempting to do that. Now index heavyweights, the heavyweight stocks, right, which are 7 of the thick stocks, what they call, which contribute maximum to the index. So here we see that it's HDFC is bullish, although no great moves happened last week, but it's bullish momentum. Volumes are good, trend is good, and it's at resistance because it's the top of the trend line channel. Reliance also climbed above the median of the parallel channel, climbed with the bull zones. SEC Bank bull zones near all-time high level. So all these three major heavyweights are doing absolutely good in the bull zones. Now Infi and TCS directly stocks are trying to hold on that sideways momentum after its recovery from bear zones. Kodak Bank as usual is in the sideways, slightly slipping to sideways from the bull zones after a recent breakout attempt. LEC once again sideways and did a hit last week. Red candle seen, and seems like it might find some support at the bottom of that parallel channel once again. Sideways, ITC, IT sideways, Bank, Kodak as usual sideways, and what is holding the market is these two stocks, HDFC Bank, Reliance and SEC Bank. Here, if you're trying to understand broader markets, mid cap and small cap index are doing good. It's sustaining the momentum. It's in fact, mid cap has climbed into the bull zones, while small cap is attempting to do that. You can see, but overall, broader markets are not done that bad. That's about it. Now, coming to the institutional participation, you can see that FIs did buy last week, but the Friday selling was severe. They did give up all and they ended up net sellers for 20 crores. And domestic institutions were, on the contrary, were huge buyers last week. 33,000 crores of buying happened. Not sure what they had anticipated. Probably the GDP data is out later that day on Friday, so that could mean a breakout on Monday, possible. No, but FDI has had huge buying on overall the entire last week. Well, FIs did buy, did not sell the entire week, but on Friday they sold everything for some reason. So overall, net longs on the derivatives of FISDs moved on last week, as you see here. Let's try to understand the global markets, the US markets primarily, and the commodities like gold, currencies, commodities like gold and crude, and then currencies. Let's begin with the currencies. Currencies have, the dollar index have moved up. It means just strengthened, but USD also has moved up, which is good. Rupees gained slightly. No, sorry. I'm sorry. The USD INR has moved up, means rupee has weakened further. Slightly, less than 0.5%. Rupee have been above 85, and it has in fact gone to 87 plus, and now cooled up a little bit when the tariff things came, and then once again seems like you can see that in the charts on the right side. Low top with the dollar index, dollar was weakening, and now it's trying to consolidate and then try to move up. A positive green, which is not that great for emerging market like ours. Downside, USD also strengthening and trying to move after small correction, small dip. In fact, even went below the 85 as well, but once again trying to climb above it, moving up. Rupee weakened. So rupee weakened and dollar strengthened last week, which is not that great news, but not too bad yet. Crude oil also is sustaining below near the 60 levels, which is very good for oil importing country like ours. Gold is showing some pullback, but look at the momentum. It's just a small profit booking probably. Gold is a hedging instrument and gold often makes new all highs when the market is falling. But now that the market has moved on, gold maybe correcting or slowly pulling back. It seems like after it is consolidating, but the momentum is not dipping sideways. So till that happens, nothing to worry. Watch out for the momentum of the gold on the medium term to fall below 60. That's the time when you have to buy the gold. Right, so that's it all. Global cues are not that bad, except that the dollar increased and dollar strengthened and rupee depreciated a little bit. But crude is good. US market is green. That's one thing that I missed on. US markets are showing some green. It's sideways momentum trying to move up. And Nasdaq also the same. Just like Dow Jones on the left. And S&P 500 is also showing green. Ended up green, but sideways rising is the momentum. So US market is green. Is good news. So overall, not that bad. It's a mixed bag. Overall, global cues are not that bad. Let's move on. So two examples on this now. These are not recommendations, but for educational purpose alone. SBI Life Insurance is within a trend line channel. There is possibility of that to break out towards the top of the trend line channel. Momentum is bullish and rising. Trend is bullish. Volumes are good. Channel patterns associated is showing good potential. RiskReward is 1:2. Union Bank of India is having a flag breakout possibility. Tight stop losses, volumes are good, trend is bullish, number is bullish, and pattern flat breakout. Right, 1:2 RiskReward. So stop picks for the next week. Union Bank of India and SBI Life Insurance. Right, so not stock picks, recommendations. Again, FNO strategy actionables, not stock picks, educational. This is an unhedged strategy, but very good range, and it's known as Batman, where we are taking inside hedges along with outside hedges. All teams. Right. This will we get the range between 2,500 and 24,000. That's key. So if you want, you can take outside this, but then you don't have any profit. You don't have any profit left. Very less left. That's why the hedges are not taken. So this range is less likely to break unless you have huge moves of 4%, 3%, 4% kind of move happens. Only then this range will break. Otherwise, it's weekly and it's another 4 days it may hold and you will make money. So if you want to hedge, you can hedge, but you get less profit. But this is Batman strategy only. This is not trade recommendation once again. Let's try to wrap it up. Markets had slided a little more. In the case of Nifty, well, Banknifty remains strong. And remember, this is after a big recovery and a potential breakout. In fact, with Banknifty in between making new all-time highs, well, all the Nifty is far away from that. So buyers were buyers, but the ended up sellers from last week and this week it was flattish. They did not buy or sell much, but until Friday when they sold heavily. So at this time, it's a small correction at resistance, and then with the possibility of breaking out or a possibility of breakdown. Anything could happen at this point. But remember, market had a correction of 7.5% in the case of Nifty and just 12.5% in the case of Banknifty, and that's a huge rally of 70% from the last June of 2022 that's happening. keep that in mind. Now let's try to bucket two of the different factors in favor of the bulls and the bears. Bulls factors towards the bulls is leaning towards the bulls, looks like. US markets are green, India VIX has dipped around 7%, options are high, put call ratio is showing bullishness on the Banknifty, futures is showing bullishness on both indices, while Japan's indicating further up moves, expansion, bullish bias, crude oil remains low, momentum sustains the sideways momentum, and trend is remaining in sustained bullishness. Heavyweight stocks are sustaining the momentum. Both indices are above the 20 as well as 200 expansion moving average. Dollar markets are also doing good, maintaining that momentum sideways. Sector indices are also sideways momentum maintaining. So all positive factors you can say in favor of the bulls. But for the bears, India VIX remain high above 15. So I'll be cautious. FIs are entered selling mode, they're not buying big yet. And the momentum will slip sideways in the short term for Nifty especially. So some loss of momentum, you have to be cautious. 2 weeks of continuous pullback. Some portion is exercise there. So always keep that in mind that volatile situations can come because of the US trade war or tariffs, whatever we call, and things like the India-Pak conflict. And so technical charts will go for a toss in such case. Keep that in mind. But still, the market view volatility can be there. Market seems to be technically trying to break out at resistance, you can say, but I'm taking a mild bullish view for the next week. So 24,000 and 25,500 is the range I have for Nifty, 50,000, 56,500 I have for Nifty. That and anything above 56,000 by Nifty and 26,000 above is meaning that the market is trying to make the next leg of rally. So until then, things may be volatile, may be sideways, may be bearish, and all that will happen. But that's the level that you have to watch out for to understand if the market is breaking out and making the next leg of rally in the upside or not. So always keep that in mind. Hedge your portions, hedge your portfolios. Your capital is all that you have, and risk management is all that trading is all about. So hedge your portions and portfolio. And also hedging using the options can be used for making rental income. Check out the playlist for more details. That's all I have. Thanks for watching, and subscribe, like, put in your comments, share this link to others so that they can also see that all this in case you like the content. And also active on X. I have a positive technical charts and all that in the X. You can check out that as well and subscribe to it as well. That's all I have. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.